Hi everyone, Brian from Bear Traders here. It is Wednesday, December 15th. This is the midweek video where we'll take a look at where we've gone so far during the week and take a look ahead and see where we could be going for the last 2 days. Of course, we had the big event here today with Jay Powell and the Fed coming out with their statements regarding tapering and interest rates. And obviously, the market took it pretty well when you look at the way we went out the day and when we started the day. So let's get down, take a look at the charts and see what they're telling us. And so before we get going here, let's take a quick look at my book on Amazon, How to Swing Trade. Available there. Money Management Rules, Routines, and Strategies of a Swing Trader if you want to check it out. It's on Amazon. So now let's get down and take a look at some of the charts. Okay, so start out with the Treasuries, as we always like to do here. Taking a look at it, the 10-year. Again, we're just sort of pretty aggressively chopping in a range here from 1.65. These are pretty big moves for Treasuries on a day-to-day basis, but again, we're just sort of hovering up and down between this 1.65 and 1.35 range, and still just stuck in this range here, not going anywhere. Maybe trending up a little bit after coming off this low, but again, Fed Powell did say that he came out a little bit more hawkish than I think the market was expecting, and obviously they liked what they heard. We'll take a look at the charts here quickly. Let's actually flip over to Finviz just to get a high-level view of how the morning went. You could see here we were pretty much stuck in a range in most of the markets. Actually, the NASDAQ was selling off a little bit, and then we had the release of the minutes right around 2 o'clock, and then we had the pop-up and then the pullback, and then Fed Powell started talking and answering questions, and you can see how the market reacted there very positively, and we went out pretty much at the highs of the day. Let's flip back to stock charts. Let's take a look at the individual indexes, and you can see here again TLT down a bit, which meant the yields were up a bit, but again we just seem to be sort of stuck in a range, but generally speaking making a series of lower or higher lows as we continue to move higher lows and higher highs. And maybe we are gradually trending upward on the interest rates, which would make sense because they are planning to start to raise interest rates next year and accelerate the tapering of buying as we go into new year as well, or tapering of money printing. So here's the transports. Not a great day on the transports, bit of an inside day. And you can see here we've broken this uptrend and are trending down a little bit. We're below this 20-day moving average. And again, probably not as good a response in the transports as we got with some of the other indexes. You can see here the Dow back up testing this 3,600 level. And we'll see what tomorrow brings. If we can break through this, obviously this is an area right here, 3,600, 36,000 I should say, which is going to be an area of resistance. So the question is, have we made a higher low here? So we made quite a low here, bounced back up, and now we've pulled back and now we're bouncing again. So this challenging and taking out this 36,000 level will be telling as we move into the rest of the week if we're going to continue to move higher and challenge this all-time high in the Santa Claus rally that we may be getting. The IWM, bit of a double bottom here. You can definitely see we bounced quite a bit off the lows of the day today, went out near the high. So again, let's see if this is a double bottom. This is obviously a level that's pretty critical, and it actually goes back to some of the prior levels of support that we had through July, August, and September. So again, let's see how the market reacts the rest of the week. It's a bit of a unknown right now if we're going to get follow through, but I am suspecting we will. The Qs, again, a higher low. We had this low here. Higher low here, nice comeback. We're back up near this, obviously this 400 level from here, here, and here, area of resistance. So again, if we can close above that, maybe tomorrow, then that'll give us the all clear to maybe challenge that all-time high at 405. The SPY, just again, right back up to the high. I don't think we closed at the all-time high. Close here was 47.12. And again, we just 3 points short of this all-time high close. So again, it'll be interesting to see if we can actually break out tomorrow, or if this again is going to become an area of resistance. The dollar, again, pretty strong. We are kind of making this ascending triangle. This 25, let's call it 25.90, is obviously the area of resistance. So if we can get through 26 and close above that, then we will be breaking out, which won't be good for emerging market stocks and stuff like gold, silver, some of the other commodities. Usually dollar strength means commodity weakness. And again, like as this VIX goes, as the markets go higher, the VIX goes lower. So we had quite the pullback today, right back to these moving averages. And again, if we get another follow-through day tomorrow, like I'm expecting, then the VIX should drop even further. So we'll see what happens. I'm just kind of guessing at this point. So tomorrow will be a very telling day for the markets to see if we get a follow-through. Okay, so let's wrap things up a little bit here with take a look at the sectors and how they performed. Of course, one day we had this Wednesday was a great day for technology. We had a bounce back on all of those technology stocks, NVIDIA, AMD, Apple, all looking pretty healthy as we went out the day, very strong. But if you look at the week performance and you can even go back to the monthly relative performance, you can see here there has been a rotation of capital into some of the more defensive plays. For the week, consumer defensives those would be kind of the staples. They've been up quite a bit on the week and on the month. Utilities, again, safety trade has been strong during the week and obviously the best performer in the month. And healthcare is up there too as being a sort of a safety trade. So money has been rotating into these safety trades over the last month, and particularly over this last week. So we'll see if we do get a bit of a shift next, the remaining 2 days of this week, back into something a little bit more risky, risk-on assets, the technology sector as an example. So yeah, like I said, the tale will be told as we get into Thursday and see where we go out the day Thursday. So let's wrap things up here. Let's take a look at how the futures look right now. We've got everything's in the green, just sort of marginally right now. So again, let's keep an eye on those indexes. Let's see if we can make new highs tomorrow, and particularly see how we go out during at the close. And again, if we go out on a higher high, or if we end up getting a bit of a buying frenzy here and then a pullback again. So that'll be yeah, it'll be very very indicative tomorrow when we see how things go out. So let's wrap things up again. Let's hope we'll see you at 8 o'clock in the morning live on YouTube. We'll be kicking things off in the Bear Bull trading room. We'll look at the pre-market action and then trading the market open at 9:30. Hopefully you can join us for one or all of those things. And have a great rest of the evening, everybody. Bye for now.